Hello everyone, Michael here from Adventurous Real Estate Investors. Today I want to discuss what a capital stack is and how it is organized. A capital stack in a real estate transaction encompasses all the capital that is required to finance a property, and more importantly, it defines who has the rights to income and profits generated and who is entitled to the property should there be a default. A capital stack can be broken down into two main tiers. Number one is debt, and number two is equity. And these tiers can be broken down once more. Debt is broken down into senior debt, mezzanine debt, while equity is broken down into preferred equity and common equity. So starting at the bottom of the stack, you have senior debt, mezzanine debt, preferred equity, and then common equity. The lower you sit in the capital stack, the lower the risk, and thus the lower the return. The higher you sit, the higher the risk, but the higher the return. For the purpose of this video, I will only discuss senior debt and common equity because that is how our syndications are typically structured. Senior debt is typically provided by mortgage lenders and is the first position to be paid from the cash flow generated by the property, and they are the first to be paid at the time of sale, receiving their outstanding principal and any accrued interest. If the property is underperforming, they also have the right to initiate foreclosure. Common equity is provided by the limited partners in a syndication and sits above the senior debt, while in a joint venture, this equity is provided by partners. Although this is the riskiest position, this is by far the most lucrative. Unlike senior debt, equity investors not only get to participate in the cash flow generated by the property, but they also get to reap the rewards from forced and market appreciation. However, if the property defaults, the concept of foreclosure does not apply and they risk losing their entire capital. If you are an investor in a deal, it is critical to understand how the capital stack is structured so you can determine your position and how and when you will be paid out during the operations and in the time of sale. Until next time, explore more, adventure awaits.
Woo!